Definitely, the lack of contagion, despite meaningful moves, is very positive for APAC banks, because we do not believe decoupling is going to happen. We saw that in 2008. So yes, net, the first order effect in APAC is very limited. But what is more important is what is going to be the second order effect for APAC banks. As we saw, there are no AT1s, nothing meaningful at least. There is no meaningful cross-border holding of commercial real estate and all of those, at least from what we know as of now. Liquidity is not a concern for APAC financials by and large. Capital is not a concern. We do not have AFSs broadly reflected in capital ratios. Risk management seems to be good. Asset quality seems to be fine. So by and large, first order effect is okay. But you're right. Now that we have kind of looking through lack of contagion, what we are more worried about to an extent is what is the second order effect and to what extent it will impact. So we are kind of going literally country by country, stock by stock to figure that out. But yes, by and large, we are okay.
And what have your findings brought out in terms of region-wise? I know you can't talk specific stocks, excuse me for that, but broadly speaking, which are the regions which are more resilient in APAC versus the ones that could be perhaps more vulnerable, especially in terms of the remittances that come out from the West, especially in terms of export revenues coming from the West, and interlinkages because of that?
Yeah, that's exactly what we're trying to figure out. And it's not as straightforward because there are a lot of offsets. So in terms of resilience, what we think is important is domestic drivers of demand and GDP, interest rates, where central banks have bigger say in setting up domestic policy rates, asset quality holding up better because we have much more domestic demand resilience. China, some of the state-owned enterprise banks seem to be doing well. They are reasonably idiosyncratic. We had reopening as one of the biggest policy pushes for China in a positive way. Some of the Indian banks look relatively all right. Thai banks within ASEAN look quite attractive. Indonesian banks, very long-term idiosyncratic, positive story. Domestic-driven, lot of resource exports helping, value-added resource helping, balance of payments holding up better. So these are the markets where we think things are holding up much better and may continue to do so on a relative basis.